How's it going? It's Abe. If you've ever looked at the stock market and felt a little confused or even scared, you're not alone. A lot of people see the headlines about prices going up and down, immediately think, that sounds risky, or I could lose everything if I invested. Today I want to explain how the stock market actually works in plain English, no hype, no jargon, just the simple reality. By the end of this video, you'll have a much clearer picture of what investing really is, what it isn't, and why the fear of losing everything is much less likely than most people think. Let's start with the basics. Think of the stock market like a giant marketplace where pieces of companies are bought and sold every day. When you buy a stock, you're buying a small ownership slice of that company. If the company does well over time, the value of that slice tends to go up. They're selling more products, they're making more money, they have more assets. Your share of the company goes up because the whole company's value went up. Now, prices move up and down every day because of supply and demand. People buying and selling based on news, earnings, economic data, and sometimes just plain old emotions. The daily movement is normal. It's not the market breaking or crashing every time it drops a little. It's just the natural rhythm of thousands of people making decisions every single day. Here's something most people don't realize. The majority of money in 401ks is actually invested in broad market index funds, the stock market. These funds basically own a tiny piece of hundreds or thousands of different companies all at once. So instead of betting on one single company, you're owning a small slice of the entire market. That's why they're called passive. You're not trying to pick winners and losers. You're not trading, you're investing. A big difference. You're just owning the overall market and letting it grow over time. For most regular people, this is actually one of the simplest and most effective ways to invest. Even if they never looked at their 401k statements closely, this is how wealth in their retirement accounts is actually growing. A lot of fear around investing comes from two big misconceptions. That investing is basically gambling, that you could lose all your money in a crash. Now, the truth is, the stock market has never gone to zero. Even during the worst crashes in history, 1929, 2008, 2020, the market eventually recovered and went on to make new highs. Broad market index funds spread your money across hundreds or thousands of companies, so the risk of losing everything is extremely low. If the whole stock market were to go under, that probably means the entire world's basically ended. Who cares about the stock market? There will be down years, that's normal, but over long periods of time, the market's rewarded people who stayed invested. Time in the market beats timing the market. All it takes is patience and able to keep one's emotions separate from one's money decisions. Investing isn't about getting rich overnight or picking the next big stock. It's about owning pieces of the economy over time, staying consistent and letting compounding do the heavy lifting. The biggest risk for most people isn't the market going down temporarily. It's never getting started at all because of fear. No matter your age, understanding how this actually works can quietly open up a lot more options for your future. What's one thing you learned or are thinking about after watching this? Drop it in the comments. I read every single one that I get, and I reply. If you got questions, I'll answer them. If this helped even a little bit, hit the subscribe button, turn on notifications. I'll keep bringing you more real talk like this. Quick disclaimer, I'm not a financial advisor. This is not financial advice. These are my personal thoughts only. Always do your own research. It's with Abe. I'll see you on the next one. Have a good day.